Who issues bonds? Well, as we know, equity is issued by companies. Equity is an ownership interest, and therefore stocks exist for companies, and companies have equity owners, and they also have owners that may own equity in the form of shares. Bonds are lending instruments, and whoever buys a bond is effectively a lender to that agency. And who are the main issuers of bonds? Well, bonds can be issued by agencies like the World Bank, which is a supranational agency. They can be offered by governments, for example, the US government or the German government. They can be offered by states or municipalities even. And bonds can also be issued by companies, because companies can also borrow money, and when they have large borrowing needs, they can securitize, in other words, make available make that lending in the form of security, where many potential lenders can buy a bond and then become lenders to that company. In other words, the market for bonds is quite varied in that many more agencies can issue them, including governments, including state governments, including federal governments and supranational agencies and corporates. Whereas equity is, when it's securitized in the form of stocks, only exists vis-a-vis companies, in that governments don't have external owners as they act in the public's interests. So bond issuers are typically governments who have a need to take in large sums of money and then will repay the principal and pay interest based on the revenues, the annual revenues that they have, for example, from things such as tax collection. And the bond issuance might be related to construction of major public highways or other needs that the government may have. So the major issuers of bonds are governments at various levels, including supranational agencies such as the World Bank, federal governments, state governments, municipalities, depending on their borrowing requirements, where it's lower cost and more feasible for them to tap into a bond market where many lenders can provide this capital in the form of debt, as opposed to, for example, going to a bank when the borrowing needs are so large. And that's in contrast to equity, which exists vis-a-vis companies, in other words, stocks, which are securitized equity, which also exist vis-a-vis companies.